Welcome to the Remarkable Retail Podcast, special 2025 Midsummer Season Month in Review. I'm Michael LeBlanc.
And I'm Steve Dennis.
We hope everyone is enjoying our summer bonus series interviews recorded live in New York at the CommerceNext Growth Show, brought to you with the help of our summer sponsors, Find Mine, Glass Media, and Crave Retail. And we thought this summer, with so much going on, we'd take a beat and add in a couple of episodes, catching up with each other, catching up with you all. We miss you. I miss you, Steve. But I miss.
I'm getting a little verklempt.
A chance for us to get back on the mic and talk about the stuff that's going on in the retail industry this summer.
Yeah, there is a lot going on. I don't know if it was the best idea for us to take a break from doing news of the week, or maybe it was the best idea because the more things change, the more some things remain the same, as I think we'll probably get to in a few minutes. But by the way, happy Taco Thursday.
Thank you.
Because as we record this, as people will figure out, because we're going to talk about Amazon in a minute, it is Thursday afternoon. So the night before this comes out. And really, just before we got on the mic, we learned that after the Trump administration said there will absolutely be no extensions to the August 1st deadline, Mexico gets a 90-day reprieve. So don't touch that stove.
Yeah. Ow. Ow. I mentioned off the top that we had some supporting firms that were helping us out. We'd love to hear from more people who would like to help us out for season 11, season 12. Talk about that for a bit.
Well, yeah, I would just say if you want to advertise on the podcast or maybe partner with us at an event, which longtime listeners will know, we do from time to time. We are getting ready for both the new season, which debuts right after U.S. Labor Day, as well as casting our minds forward a little bit to events like the NRF Big Show, Shop Talk, etc. So if you're interested, send an email to podcast@sageberryconsulting.com and we'll chat about it.
Fantastic. Now, what have you been up to this summer? I know you've been doing a bit of traveling, but how's your summer been so far?
It's been hot, mostly. As some people might remember, we alluded to this when we recorded our final episode of the season and our interviews, which hopefully people have been listening to at the CommerceNext Growth Show. My hope was leaving Dallas in the summer to go to New York would be a break from the heat. That turned out not to be a great strategy. However, I have been up in Chicago visiting my kids. I did get also up to Ottawa for a board meeting, which was a little bit cooler. Actually, it was quite lovely when I was up there about a week ago. And I also did sneak away to the mountains of Colorado for a little bit, which as it's about 100 degrees here once again, I'm thinking that maybe we should relocate the Sageberry Consulting World headquarters to someplace a little bit cooler.
Well, here's a fun fact. I'm not even sure you know this. I didn't really start in retail. I didn't get my start there. It's funny. I ask, people how they got their start or did they always want to be a retailer. I actually got my start in heavy construction and landscaping, all through high school, university, and then I had my own construction company. So I revisited my past, so to speak, this summer. A lot of things had kind of gone around the house undone for many, many years. And so I've got my old skills back and rebuilding decks and refinishing stuff and landscaping. And here's my retail
if this podcast thing doesn't work out, you got a skill you can lever. So,
well, AI can't take the job of somebody doing that kind of work. It's interesting, right? When
Very
you
good
think
point.
about it that way. I often tell my friends at Home Depot, if Home Depot was around when I had my construction company, I might still be in the construction business because, fast forward to when I was in it, like if you forgot something or needed a part or whatever, you were done. Like your whole day was so unproductive. The place is closed early. Now I was doing some plumbing in the garage and I needed a part and I had other things going on. I went to Home Depot. They DoorDashed it to me in an hour and a half.
Yeah.
Now I paid $9 for it, but that, as a contractor, time is
huge
money.
Difference. Yeah.
What a difference. Like I would be, who knows? You and I might not have even ever met unless I was building the deck for you or,
That's right. That's right. It's a little bit of a commute to the job site every day, but yeah.
Well, That might have happened. So anyway, that's what I've been up to. Working hard and doing some barbecue as well. Now, um, we've been both doing store visits. We have some
Yeah.
store visits that we did when we were in New York City. You've been doing more. I've been doing more. Talk about what you've been seeing over the summer.
Well, just quickly, I've been trying to get out. I mean, I do this generally anyway, get out every once in a while and just kind of do some store visits. I've been a little bit more, um, I guess, focused on it given all the tariff stuff. And just, there was this one particular example was there was this concern, oh, there are going to be all these out of stocks because of the tariff situation.
Hmm.
And so
Hmm.
some of that is just kind of inspecting that. Some of it, though, is really around seeing which retailers seem to be executing well and which aren't so much. And you can also gauge promotional activity. And that was the one thing that really struck me when I was out visiting stores last couple weekends is just the Christmas in July, which
Mm, mm.
those of us that have been in retail forever, I think when I was first at Sears a million years ago in our outlet store division, we loved to run the Christmas in July sale. We'd have a little Santa and all that kind of stuff. And mostly it smacked of
But
desperation.
did you have but did you have Summerine, this new Halloween in the summer
Oh,
thing? Did you
we
have
we did
Summerine?
not. That could explain why Sears went south, perhaps. But what I found really interesting was just this kind of summer or Christmas in July activity, but also some brands that typically aren't on sale being on sale, particularly at
Mm,
department stores. Just one example of that would be some of the Ralph Lauren stuff that's on sale at Macy's. Now, I don't. What I often say when I talk about this is, it's not like I keep detailed records or take pictures to do apples to apples. So perhaps I'm just paying more attention to this, and this isn't that different.
mm,
So
mm.
I think we'll really have a much better idea when some of these retailers report in a few weeks. Most of the earnings we'll talk about in a few minutes are less retail centric. A few big ones, obviously, like Amazon, but and then some of the things that are just interesting to compare. And again, when you look at one or two stores and don't have that apple to apples, I don't want to read too much into this, but one of the malls I go to is the Stonebriar Mall, which is in a suburb north of Dallas called Frisco, which is a big A mall, huge, probably a top 20 mall in terms of volume in the country. And go to a place like Abercrombie and Fitch or American Eagle and are packed. And then you go to these humongous department stores like the J.C. Penney store that's right close to their headquarters, and there's nobody in there. And
Not so
it
bad.
just is really a little snapshot of what's going on in retail. So anyway, I mean, mostly what I saw is a tense promotional activity. You also can see a little bit who's executing well. And we'll give
Mhm,
some props
mhm.
to Macy's. I think Macy's is executing pretty well. I would say the execution, based upon the couple of penny stores I've seen, is they appear to be a little bit better at getting things in order. Kohl's, perhaps we should talk about briefly, because that is just such a train wreck. It's even hard to describe. The amount of clearance merchandise was staggering. The percent of
Mm.
markdowns, unbelievable. And housekeeping, not very good. And the thing I wonder about there, aside from some of the issues we've talked about with Kohl's for the past whatever, and I know our non-US people are probably bored of talking about Kohl's, but I'll just say very quickly that um, you know the the emphasis on Sephora in Kohl's is first thing you see. The overall performance of Kohl's has been terrible, and I'm kind of wondering, what's Sephora going to do? Like, the overall traffic patterns have got
Mm,
to be
mm.
affecting their business, I would think. And I gotta think Kohl's is going to be closing a bunch of stores. So that's just one thing I just kind of wondered about. What's the plan B there? They've got to be
Yeah.
thinking about it. But yeah, I don't know how you get out of this death spiral. And when I look at the housekeeping issue, I guess the one thing I was going to mention quickly, but we see this at other places too, and I'm sure you've experienced this. When sales are bad and you're looking to cut expenses, well, payroll is a big variable expense. And I'm sure the people that work at Kohl's are good people. They want to do the right thing. it just appears to me that they don't have the payroll dollars to keep up with it, which is really staggering when you think about how poor the volume is. It's not like they're getting overrun with traffic.
Yeah.
So more to come there. But
I
I
think it
don't
makes I
expect
think
their
it
next
makes
quarter
it
will be good.
hard. I think it makes it hard for the employees too, because the vibe of the store just isn't fun and exciting and
Yeah.
interesting. Like, there was a retailer here who did an experiment with Hudson's Bay, and they had their people. In theory, it sounded great. It was MEC. They were going to put a, couple of like little shop and shops for a different retailer into Hudson's Bay, which kind of makes sense at a high level. The
Yeah.
challenge is, if you work at like an REI, which is kind of like the REI of Canada, it's
Yeah.
exciting, it's fun. People want to talk about, I'm going to go climb a mountain, I'm going
Right.
hiking. I talked to some employees, they're like, it's kind of like a gulag shift because it's not exciting. There's nobody here. There's no energy in the store. It's kind of
Yeah.
boring. And I think that about Sephora, because if you're a Sephora employee, I would bet it's a lot of fun, exciting. There's always something going around. There's always a
Yeah.
makeover happening, like in a busy Sephora store, right? It's an
Yeah.
interesting
Sure.
place to be. It's a little less interesting, I've done some of those visits. It's a little less interesting in a Kohl's. Like it's like, it's kind of a
Well, the
boring
good
job.
news is you're surrounded with the three walls at least, so you don't get to see what's going on around you. But
Yeah.
yeah, it's so anyway, it's
Anyway, we
depressing.
wish him the best. We wish
But yeah, I hope some things start to shift there.
Well, let's talk about what's going to happen, and I'm thinking forward to September. There's a bunch of conferences coming up. We'll be kicking back into conference season, and there's a few things happening that we should probably tell the people about. We're probably not going to be going to any of them as it
Yes,
happens,
right.
just the way the calendar falls.
Yeah, right, right.
But
Let's
we're
tell
watching
you.
them.
So if you're looking forward to seeing us at either the new
We won't be there.
Retail AI event or Shop Talk Fall or NRF Europe, well, be disappointed because unless
But
something.
tell us how it is. Tell
Well,
us
what's
how it
it?
goes.
Yeah, we're happy to hear, but a couple of things that are interesting. Well, one's interesting, one maybe not so much. Is I'm not going because I have a conflict, and then I'm going on a trip with my kids the next week, and I just couldn't swing all the travel. But it is
Yeah.
interesting that these three big events are all competing with each other. And I don't know
Mm,
whether there's some jujitsu going on there or whatever. It is possible, I guess, to hit two or three of them if you're willing to not sleep, I guess, or spend a lot of time on a plane. But yes, there
yeah.
are three big retail events in September. So we'll have to report on what we hear from
Hmm.
people. But yes, if you're looking for us, neither the podcast nor us separately will be there unless somebody throws a huge amount of money at me.
Yes.
So we all know what I am. Now we're just negotiating.
We can be, but I would add a fourth fun one. I'm going to Vancouver for Retail Council's Retail West, and I'll be on the stage with none other than Brian Hill, the founder of Aritzia,
Mm,
who's based in Vancouver, and I'll also be talking
nice,
to the new
nice.
president of Best Buy Canada. So, if you're one of our Canadian listeners and you feel like being in lovely Vancouver at the end of September, I will be there,
Worst
and there'll be some
places to
interesting
be.
stuff on the stage. All right, let's move from this kind of catchy uppy stuff to let's talk about let's talk about the news. So you and I were talking off mic over the past couple of weeks. How do we want to do this session or this episode? And we thought, well, what are the bigger things that are happening and moving fast? You've already hinted at probably the one that's on many, if not every retailer's mind, and that's tariffs. And
Right.
are we reaching a point where there's less turbulence, that things are settling down? I mean, we had the deal we've had some deals. We had, Europe. I don't call that a deal, by the way. That's an imposition of a number. But anyway,
Right.
we don't want
Yeah.
to get into
Yeah.
semantics. What are you thinking, and how are you thinking about it?
Well, for sure, it's the case that the degree of uncertainty is narrowing with the passage of time and with these. I mean, I do, again, not to get into the semantics, but the US has not signed a single deal. There are letters of understanding and kind of imposition. It's like I was thinking that I
Through
could
social
send.
posts, right? There's
Yeah,
truth.
like
It's just
I
it's
so,
fun.
well, I don't.
It's Go ahead.
Sorry, I was going to say that. I don't know if you know this, but I'm currently dating a supermodel. I sent her a letter indicating that we were in a relationship, and so we have a deal. So yeah, a lot of this is just now. Obviously, the U.S. has a little bit more power and control over the situation. But yes, but anyway, nevertheless, I think that we do have letters. The U.S. government has letters of understanding, frameworks for deals. But at the same time, you do see Japan, Vietnam, some other places saying like, oh, that's not exactly what
Did we agree to
we
that?
agreed to,
Yeah.
or you just put out a press release. So, but I think that is definitely getting us closer to a sense of what these policies are going to be, when they're going to be
Mhm.
implemented. There's still a lot of issues about collection. I've been talking to several companies that are like, well, we heard that, but we don't actually know what the bookkeeping looks like, and we don't know the timing.
Yeah.
And so still a lot TBD. And then, of course, every once in a while you get Trump throwing out, has a tantrum, Brazil, and then there's a carve out. So anyway, I think we're all
Get
pretty
ready to pay more
familiar.
for your orange juice, I guess, if
Yes,
you're an
we're
orange juice
already,
fan.
I think by now, pretty familiar with this. So I won't get into
Dwell
that
on
too
it.
much. But definitely the range of uncertainty is narrowing. And then there's other things that were really freaking out the economy and the retail industry in particular, like could this Iraq thing really expand?
Yeah.
So that, well, who knows? But I mean, the where we were several weeks ago with escalation is in a different place. So I think all
And
of
can you
that just
imagine,
leads to
by the
less
way, like,
volatility.
I read that in your notes, Iraq, and I'm like, "What about it?" I've forgotten about it. That you
Right.
like,
Yeah. Well, there's
"Oh,
a World
yeah,
War III thing.
we we dropped we dropped these world biggest munitions on a foreign nation," but I completely forgot about it. I'm like,
Right.
"Iraq? What are we gonna talk about Iraq? Is it a trade
Yeah.
deal?"
Yeah. Well, and of course the timing's a little bit
I go,
awkward
"Why?
here
Because it's
because
Iran, not Iraq." Ah, you wrote Iraq, it's actually
oh,
Iran.
you're right. I did. Sorry. Yes.
That's
That's
all the
embarrassing.
jokes
Yes,
go
Iran. Yes, I do
bad.
know that.
Yeah,
Damn
2 different
spell
wars.
check.
2 2 different topics.
They are two different countries, as it turns out. Yes. So anyway, I mean, I think that we are to a point, and it's awkward the timing a little bit because the deadline is for these deals to be worked out is tomorrow. So by the time people listen to this, perhaps there'll be a little bit more clarity, though I doubt it. I think it's going to take quite a while before these letters of agreement become deals, and several countries that are outside the scope of the deals, like we just talked about Mexico being kicked down the road. We'll see, but definitely things are narrowing. I still think overall that when we get to the impact of all this, it's still pretty unclear. I'll make a couple comments about it when we get into some of the earnings, but
Mhm, mhm.
it's definitely less volatile, and I would say overall people are a little bit less worried about it. But I'm not sure that that's really the right take. I guess the other thing we'll just say is that the de minimis clause, which I'm sure most people listening to are generally
Mhm.
familiar with, where there was some pauses and some carve outs and some whatever, uh, that is ending. It appears so that's got some pretty significant impacts. It's more directed, I think, towards the Sheins and Temus of the world, but it also has impacts on smaller importers and
Yeah.
whatnot.
And just for those who may not know, that's $800 without tax or duties into America from anywhere. But that de minimis is going away. So that's a direct change, really, to a lot of economics for a lot of people. As you said, we get to test the principle that Shein and Temu say that it's not about de minimis. We've built a fabulous business based on a New Hope business model. Okay,
Yep.
so
Yep.
it's a nice segue conversation. It's a nice segue to a conversation about a surprisingly resilient U.S. consumer who, on the one hand, I mean, it seems to be two schools of thought. On the one hand, I'm going to go shop for Christmas now because I think prices are going up.
Yeah.
On the other hand, I sense there's like, I don't really know what's going on. Maybe I'm going to hold off a big ticket purchase, but otherwise things are okay. Unemployment's down, and are you surprised by the resilience of the consumer? We're going to find more in results, but how are you
Yeah.
thinking about that?
Well, I will say that I have been not wildly wrong, but I would say mildly wrong pretty consistently for several years about the strength I kind of hate the term "the consumer" because, of course, they're very different types of consumers, and in the U.S. anyway, the wealth distortions and the degree of spending which is driven by the top continues to be more important, and the struggles among lower income folks continue to be extreme. This is a
Mm,
long term thing that continues to get worse and is likely to get worse because of some legislation that was just passed. But having said that, the performance on the retail side and spending more broadly has been better for several years than I would have otherwise expected. Of course, lots of economists predicted, and we talked about this 2, 3 years ago,
mhm.
predicted a recession that never came. Always it was right around the corner. So I think it's worth being cautious about saying, all these signs indicate we're going to be in a bunch of trouble, and being chicken little about it and just kind of kicking the can down the road. Having said that, I would say it's easy to forget that in the US anyway, there was tremendous momentum coming into this year. The US had easily the best performing of the major economies. Unemployment was 4%, and consumer balance sheets were in really good shape. So, irrespective of what you think about the Trump economic policies, we had a running start at this year.
Mhm, mhm.
So you wouldn't necessarily expect things to get that much more difficult. The thing that really turned everything topsy turvy was the chaos of the tariff policy. And I guess what I would say about that, probably two things. One is it does seem like most, certainly not all, there are definitely exceptions. Most retailers have taken the attitude that they're going to eat the cost of the tariffs for now. So we aren't
Yeah.
seeing a lot of inflation yet. Few recent reports show that inflation is ticking up, including some news we got this morning about the PCE, but it is not dramatic for sure. So it's hard to say that what the impact will be on demand as tariffs and pricing changes start to become pronounced, which it seems like they will. It's just unclear to what degree and how fast. But I also think what you pointed out is there's clearly been some buy forward, lots of reports about back to school shopping starting weeks earlier. So
Mhm,
I
mhm.
think it's just very hard to read what's going on right now. So, to answer your question, not terribly surprised about the resilience, but I think you really have to unpack it a little bit more and wait a little bit
Mhm.
longer to really know what's going on.
I heard one theory about retailer pricing strategies, and again, it's kind of like talking about the consumer, or
Yeah.
retailers. But they said the theory went something like, during this time, I'm going to eat those price increases. I'm going to eat those tariffs because I'll just wait till it sorts out, and then I'll deal with it when the tariffs become real and firm, and I know what I'm paying from
Yeah.
Vietnam, and I know what I'm paying. Do you put much stock in that? To me, that sounds like it makes sense. Okay, let's just eat it for now, and then we'll figure it out in the back half, and we'll take price if we need to, or do whatever we have to in the fall when we have more certainties, as we've been saying over the past few minutes.
Generally, I would say that makes sense. It seems to me it makes a big difference, though, where you are. Well, if you're a public or private company,
Hmm.
because a company like Walmart, which has tremendous support from the public markets, executes well, has a lot of power. My guess, and we'll see what they say when they report earnings in a couple of weeks, but my guess is they can take that attitude generally and then adjust. And a shaky quarter or two is not going to cause trouble for them. If you are, I'll just go back to Kohl's or a
Mm.
Macy's, or I think we'll talk about Saks in a while. Companies with less than great balance sheets, declining profits, and to varying degrees of the people I mentioned, real cash flow issues. It's not so easy to take a
It's
big
tough to
hit
hide it.
on the
Yeah,
bottom
you
line.
probably you probably
So,
don't have a drawer full of markdown dollars to open up and deal with it, and worry about. You're probably pretty thin on that, right? So anyway,
yeah,
that's
I think
that's
I think the other thing, the main thing to keep in mind, but again, I think we'll hear a lot more about this when most of the retailers are reporting, which will be in our next recap. Is for the most part, retailers are selling inventory that they own at the pre-tariff cost. that
Yeah.
is going to shift quite dramatically over the next 90 days, unless if you're a grocer, you have all this fresh product. Like that's not true. But if you're in the schmata business, as we say, or you're in the appliance business, your age of inventory allows you, even though it's an accounting thing, allows you to have more flexibility to do that. Again, if you're a publicly traded company and people are hyper focused on your earnings. So we
Kick the
shall
can
see.
down the road accounting. Yeah,
Yeah.
kick the can down the road accounting process. You mentioned earnings. Let's get into it. We're in an earnings season, summer earnings season. What have you learned so far?
Yeah, I'll be quick about this. For the most part, we'll talk about Amazon and a few others in a second. Most retailers are on a July ending calendar, so we're not going to hear about those earnings for a few more weeks. So we're getting a lot of the industrial companies, the Fords, the Boeings, those kind of companies, a lot of the tech firms, and I guess a few big takeaways. One is there are plenty of retailers, or excuse me, plenty of companies that are being very explicit about the hit they took from tariffs. For example, Ford, I'll just some headlines really quickly. Ford takes $800 million tariff hit, post first loss since 2023. Nissan posts quarterly net loss hit by U.S. tariffs. Porsche slashes guidance again after tariff hit. Mercedes-Benz warns of major revenue fall as tariff hits car sales. Now, I happen to hear the Ford CEO saying, we're not raising prices. That's our plan right now. So they are absorbing all of this. And keep in mind, Ford is a U.S. company. So this is really about the steel and aluminum hitting their and car
The
parts and
inputs into the
the
vehicle.
inputs.
That's
Right,
right. The
right.
input
So,
costs. Yeah.
um, but the other big earnings news, and really, I hate to kind of get too much in stock market dynamics, and please do not take any investment advice if you think I'm giving any, but the stock market continues to perform amazingly well. Some of that, I think, is the lack of volatility, the stuff we just talked about a few minutes ago. But a lot of that is driven by the so called Mag 7, where we're seeing Microsoft and Meta and Alphabet just post these amazing numbers, a lot of that driven by investment in AI. So I think you can make an argument that if you are in the stock market, you're feeling pretty good because it's really hard to be wrong in this market. I think stocks are up 30% or something in the last since Liberation Day, so-called Liberation Day. Um, Other ones I would take a look at are some of the consumer brands, CPG companies, also P&G, Kimberly Clark, some other companies giving warnings about and talking about the tariff hit. This is not so much a tariff thing, but McDonald's, Chipotle, same store sales down there, I think, which speaks to consumers cutting back. So that might be a little bit of an indication of what we might see ahead. Where we've, one category where we have seen some recent earnings that are retail specific, other than Amazon, which I keep teasing, is the luxury sector, which is really
Not great
uh,
numbers.
overall not great numbers. I love to say bifurcation as much as possible. And by the way, Jason Goldberg, you owe me 20 cents because you said bifurcation on the last episode of your podcast. Um, but we've
You take
got
Vimo.
once again Hermes, great numbers. Some other more niche, very high end brands, great numbers. LVMH, Prada, which had been strong, pretty meh. And then the Kering Group, which owns Gucci, the Gucci brand's down 25%. It's hard to meet. I think this is the second quarter, I think, where
A
they've
lot.
had a huge decrease. So that's really a train wreck. So I think the question here is going to be, are we going to see a pretty significant reset of this market? We've already seen, for example, LVMH is going to try to sell Marc Jacobs. There have been some other rumors about things they might offload. Kering Group in particular talked about store closings for the most part. I think we may have talked about this several episodes back, where most of these mono brand vendors on the high end space have been opening stores like crazy. So to start to pull back outside of, say, China, which has been a struggle for some, for
Did you
most.
did you see did you see that what LVMH did in China? They built that boat, that
Yeah.
yacht. I think they called it the Louis, which
Yeah.
which was a sail to nowhere, like it never leaves, and it's a
Yeah.
store on a dock. My goodness, it's even more impressive than building hoarding in New
I know.
York, New York City.
It, it, tur- it,
Crazy, the
tur-
money. the
Oh
money they
yeah, it is
spend.
crazy. Well, it turns out when you have high prices and 80% gross margins, you could spend a little money on stuff. But anyway,
Focus goes nowhere.
um,
Yeah.
but yeah, the last thing I was going to say about it, and then we can maybe finally get on to Amazon, having teased it now 17 times, I think, is what's going to happen with pricing. A lot of these businesses have really been able to take price up, and
Mm,
of course, tariffs will have a pretty big impact because, of course, many of the European brands sell into the United States. The U.S. is a huge market for them, not the majority market for most of them, but very, very significant. And they're about to get hit with pricing at a time that this revenue stall has happened before this tariff turbulence really took hold. So it's a very, very difficult situation, and it looks like a lot of the players are really struggling or going to
I guess it,
find
I
themselves
guess the
struggling.
very at the it's your point about not one set of luxury even, there's a band within there because, if we're talking about 15%, at the high end of luxury, another 15%, even if that's, cost doesn't actually equal to selling price, but they could take that price up, but the American consumer is going to pay another
Well, yeah,
10% or whatever
yes,
percent.
yes, and no. I mean, I know from my Neiman Marcus experience, and this is why I think I mean, Hermes does a lot of things well, for sure. And if anything, they're kind of even more of the moment than they may have been historically. But the key thing, really, in the luxury dynamic is what percent of your business comes from the top, I'll just say broadly, 1% of consumers
Mm,
versus more broadly affluent. And the brands that are performing well now not only have great brands and great execution, but most of their business comes from that top 1%. When you start to get down to LVMH and Gucci, some of these
mm,
brands, they've got very large percentages from people that are affluent but not truly wealthy. And that's the same thing to understand about what's going on with Saks and Neiman's as well. So that's a really important distinction. And it hasn't been so important until we've really seen some of this economic shakiness. And then you've got some other things going globally with what's going on in China the last few years.
yep. All right, let's talk about Amazon. We've teased it innumerable
That's right.
amounts of time.
Yeah.
The results have come up. You and I have been talking about it off mic about Prime Day. What does it matter, and what
Yeah.
we think about it. But what did you observe from the somewhat opaque Amazon results numbers? It's hard to kind of sort through these things exactly.
Yeah, well, I'll try to make this high level because literally they just reported an hour before we got on the mic here. So haven't heard a ton of analysis. So this is pretty much me just reading through their results, and the conference calls going on, I think, as we speak. So we'll also get a little commentary. But overall, another great quarter, strong sales growth, strong profit growth, strong cash flow growth, for the most part, beat expectations. But in the words of Shania Twain, that didn't impress investors much because the stock looks to be down a little bit. Now, what appears to be going on there, and I'll talk more about retail in just a second, but AWS, Amazon Web Services, which many people think of as the most profitable part of Amazon, it's probably not true. It's probably the ads business, but nevertheless, huge profit contributor. Sales growth was a bit underwhelming, 17%. Most people would love that. But
Right.
compared to what Microsoft reported, it appears
Mm,
that Amazon might be losing relative market share, and the margins have gone down quite a lot.
mm,
Again, still quite high, but have gone down. So it seems like there's more price competition, and they don't seem to be holding shares. So that seemed to freak out investors a bit. But if you look at more broadly and really dive into the retail part of it, one thing that's super impressive is they drove a lot of retail sales growth, about 9% overall, but their inventories were actually down. So that's kind of interesting. I don't know if we'll get any commentary on that, whether that's just, unbelievable. Some of it's a shift to third party, I'm sure, but it's interesting. It's
right. I
it's
was
much
gonna say,
more
yeah.
significant than I would have expected. But just in terms of hitting on the metrics really quickly, online stores, so this would be the first party part of Amazon, up 10%, definitely faster than the overall e-commerce growth rate. Physical stores, mostly Whole Foods, up 7%. I have to say I don't quite understand that, because that performance has been, pretty significant. Where groceries kind of, so they seem to be doing much better there, though relatively small to the total. Third party sales, which is, I have to remind people, this is a services business. So when you see the revenue increase, which was 11%, that's what the third party are paying Amazon. That's not GMV, but they
Yeah.
probably more or less are roughly correlated. But the big star again, the ads business, sales growth 23%, and of course this is a humongously profitable business. So to your point about the opaqueness, Amazon Web Services is a very contained unit. When you start to get to the other part, you have the geographic breakout. You got Prime. You got other things in there. The studios. So it's really hard to parse out the profitability of the component pieces. And as a practical matter, when you pay for a Prime subscription, you're subsidizing your delivery. You're getting um,
Videos, you're
the
getting all kinds
videos,
of stuff.
and so anyway. But there's no
Prime Studio.
question that the ads business is becoming a much bigger percent of the non AWS part, and it's massively profitable. And the more retail grows, the more they can sell ads. So anyway, they're firing on all cylinders. Their guidance was
And
strong, but
congratulations, by the way.
yeah.
Congratulations to Amazon founder Jeff Bezos for his wedding
Yeah.
in Venice. I think you're in mine. I know you weren't there. I wasn't there. I think our invitation got lost in the mail. I thought we were
I
pretty tight with
I had
Amazon, but
I had another commitment,
yeah.
so I wasn't.
Oh, you got invited.
Well, I
I
was
didn't get
also
invited.
just in Italy, and I'm like, come on, how much time can I spend in Italy?
Why? How much time can I go back? How much time can I go let's just wrap on Amazon just for another couple of minutes on Prime Day. So Prime Day
Yeah,
this year had a few notable things, mostly that it was Prime, to your
days.
non-love inactive Prime days,
Hmm.
4 days. So right away it becomes hard to kind of comp understanding what Prime Day did or did not do. I mean, we saw some noise in the market saying, it's soft now, but it picked up later. And
Yeah.
you've got other lifts. I was reading a Salesforce report saying that overall e-commerce went up because they don't really know what happened to Amazon. Any thoughts on Prime, other than the fact that does Prime Day, not unlike Black Friday, does it even matter? Does it just shift sales, and does it really grow the business? Uh, Anything else you might add about Prime Day from what we know?
Well, at the risk of getting our friends at Amazon mad at me, I don't pay any attention to Prime Day, really, uh,
I get
because
greenies for my dog. I pay a lot of
well,
attention
I
to
may
when they.
pay attention to it in terms of purchase, but in terms of what it says about retail, I think the answer is it says almost nothing. Now, Amazon earnings don't include Prime Day because it was the quarter ending June. So, uh, but what is conspicuous in the PR around Prime Day is that um, there weren't a lot of statistics about it from the company other than it was a record. Well, when your overall business grows 10%, it would be surprising. I mean,
Not the
shocking if it weren't
record.
a record. And to your point, many of these events move sales around. That doesn't mean you shouldn't do them. It doesn't mean as a competitor you
Mhm.
shouldn't respond to them. But to try to draw some conclusion strategically about it, to me, it's a total waste of time. And my guess is because they didn't rave about it. Now, maybe Jassy said something as we speak on the conference call that will
Yeah.
make me look wrong, but it wasn't in, there was no amazing statistics in the press release. So my guess is it was a nothing burger.
All right. You talked about the great Canadian songstress Shania Twain. Let's talk about the great American songstress Bonnie Raitt. Let's give them something to talk about.
Yes.
What's going on? Let's talk about other things you want to weigh in on that have created some buzz for the summer.
Well, there's a few things. I loved Bill Cohen's. Well, I don't know if he wrote it, but Bill Cohen's story for Puck about what's going on is Saks. The headline was "Let's talk about Saks." Um,
Yeah.
so that's a deep cut for some of our listeners. But anyway, lots going on there. I feel like we have to talk about it just because we've talked about it several times the last time we were on the mic. So what's happened in the last 5 weeks or so since we've done that? Well, we got their first quarter results. So these are a little bit out of date. These were, I think, leaked as part of a call with or not leaked, but shared as part of a
Mm.
investor meeting. So pretty rough first quarter. Revenues down 16%. So when we look at what we just talked
Mm.
about in terms of luxury players, kind of fits in that pattern. But we also know
Mm.
there have been some inventory challenges there. I don't know if the negative press really causes people to, if that affects consumer demand or not. But the net loss of the combined entity, so this is really the first time we're hearing about the financials of the combined Neiman's and Saks Fifth Avenue business, the loss got even worse. I still, not to dwell in the past too much, this is, we should play glory days in the back. But when I was at Neiman Marcus, uh, a quarter like this, we would have made easily $100 million. So the business has obviously fallen apart in many respects.
Mm.
There was refinancing activity, lots of concerns about their ability to pay vendors, those kinds of things. Still shocking to me that here's a deal that was done in December that they're already refinancing. I forget if I think it was Standard and Poor's when they got word of the refinancing that was agreed to. They downgraded the credit rating to double C, which is not awesome, and
Mm.
referred to as tantamount to a default. So that's not
That's not
awesome.
awesome. No,
But
absolutely not.
apparently, while Saks Global is not current with all their vendors, they have started to make good on the repayment plans that they laid out. So that presumably is good for being in stock. And I have gone into a couple of the Neiman Marcus stores here in Dallas, and they look fine. So
Yeah, you
small
said
sample,
you
but yeah. So I wouldn't worry about it. The other thing that came out a couple of weeks ago was a report that showed that Saks Fifth Avenue and Neiman Marcus were losing share to Bloomingdale's and Nordstrom.
Mm.
Um, I'm not sure. I mean, it's not surprising. Some of that is probably a trading down phenomenon. Some of that is probably some of the execution and inventory issues. So we'll see if that persists. But of course, just like we talked about with the other luxury players, well, now here comes tariffs, and Saks and Neiman Marcus are now just U.S. businesses, given Saks pulling out of Canada.
Mhm.
So they have a lot of inventory coming from European brands. So presumably, the EU tariffs, as well as to a
Yep.
smaller degree, the UK tariffs will be significant there. So it's a
Mm.
tough environment.
You mentioned Canada. Of course, my ears perked up. Let's talk
That's
about
right.
something that's Saks adjacent, which is Hudson's Bay. And for if you're not following, this is the most entertaining Hudson's Bay has been in like 20 years. The soap opera that is going on. So Hudson's Bay, all the stores are closed, completely liquidated, and some of them already, and that included 5 Saks stores, some Saks off Fifth, some outlet
Yeah.
stores, about 90 stores in total. So, things are starting to kind of work their way out. This one bid from this Chinese billionaire, Ruby Liu, has just been something to watch because, make some popcorn, pull up a chair. I mean, she basically said, I'm going to reinvent the entire industry, and goes and presents that to all the landlords who are fairly serious people. And they're all like, there's no plan here. They're there. We're not going to give you these things. We're not
Were
going
there
to give you
concepts of a plan, though?
it's not even concepts of a plan. She's gone through 3 law firms. She went in front of the judge of the Supreme Court of the province, and they said, and she didn't have a lawyer, and he said, you should come back with legal representation for this. Now, Hudson's Bay, the people who are left at Hudson's Bay, are now petitioning the court that they accept her offer for these 26 stores. She has 3 because she owns 3
Yeah.
malls, so they accepted the 3 that she was in the mall. But anyway, last week she ran a job fair in Toronto for stores that don't exist. Like, there's no stores in Toronto. She has 3 stores in the other end of the country, and my goodness, what a thing. Now, on the positive side, Hudson's Bay is a big piece of Canadian history, and there is a charter from 1670 that
Oh,
actually
yeah, I
was
saw that. Yeah.
offered. They were going to sell it, like another piece of real estate. But the Weston family, who owns Loblaw and Holt
Yeah.
Renfrew, stepped in and said, "We're going to buy it, and then we're going to donate it to a museum."
Hmm.
So,
That's a
and
classy
and
move, I would say.
the classy move, just like Canadian Tire, who bought the Stripe brand. So these, make no mistake, this will never be called Hudson's Bay again. That's Ruby Liu and her new concept. So anyway, it's very entertaining, and if you're not watching it, it's it's just news every day to keep us entertained in the summer. So there you go.
Well, I wish anybody who's trying to reinvent a department store
Best of
good
luck.
luck and Godspeed.
Good luck and Godspeed. On a side note, she says she's secured in her latest thing a bunch of senior executives from Hudson's Bay, and they're all supply chain people. I'm like, okay, that's a good thing to have, but what's the how does that fit into the contract?
Yeah.
Anyway, whatever. God bless her, and let's see how it goes. Let's talk about other stuff that's going on, like this
Yeah.
AI. We picked up on this certainly
Okay.
at CommerceNext.
Yeah.
Everybody was talking about it. How retailers and if you've been listening to our summer series, it's come up
Yeah.
multiple times that you've now got AI agents that are now between you and the customer, and talk about what you're observing. And we've got some new development over the summer. Talk about what's going on.
Yeah, just real quickly, and I'll say to our listeners, thanks for hanging in there because I know we're going long, but hopefully this is riveting.
Oh, did we not say at the top we're trying to be like a more
Yeah,
Joe
this is like
Rogan
Joe Rogan.
podcast?
Yeah,
We do
we're
3 to 4 hours, so
yeah,
settle in,
clock
take
in.
that
Yeah,
trust.
if you want to hit pause and order a pizza, this would be a good time. But no, one thing I've started hearing mentioned, which I hadn't heard this language exactly, was answer agents. That specific,
Mm,
building these agents to answer questions, which is really, we've already talked about this, and I'm sure many people are becoming aware of this. The power of agentic AI is to be able to send out an agent to do something on your behalf. And if folks are playing around with Google or whatever, you're starting to see a lot more AI enabled responses, or at least the option of that. So
mm,
I think it's just interesting how fast this is moving. Now, one thing that I thought was interesting in the Alphabet news, so that's the parent company name of Google, is of course many people, myself included, have said, well, search is really changing. Is Google going to really face the innovator's dilemma, where they try
mm,
to protect their ad business, but the world is moving in a different direction? And I think that is a real risk, but it is important to put the perplexities and some of these other search AI search efforts in context, because the Google search business still grew quite significantly in the most recent quarter. So they are hardly getting close to the precipice here.
yeah.
But it will be, I mean, it is definitely something to watch. One of the other things that happened since the last time we were on the mic, which I think is very interesting to watch, is a startup called Daydream, which
Mm,
was founded by Julie Bornstein, who some people may know. She was senior executive at many important retailers, was, I think, the chief operating officer at Stitch Fix for a number of years. If you've gone to any retail conferences, I'm sure you've seen her speak. Very
great merchant.
impressive executive
Very impressive.
with great experience. She raised $50 million to launch a new app called Daydream, which is in beta, but presumably will become more widely available. So I'm interested to check that out. And Julie, if you're listening, maybe you want to come on the pod and talk about it. So lot. I mean, it's just moving super quickly, and we may have some more things to talk about this coming up soon.
I know you're a big fan of A&E's Craig Brommer. He's been on the pod a couple of
Yeah,
times. Great friend. We
yeah,
saw him in New
great guy.
York.
Yeah,
Are, are you a fan of Sydney Sweeney? So this seems to have gone in
this is where my worlds
direction.
have come completely together.
I tell you,
The Venn
I
diagram. Do I like Sydney Sweeney? Do I like Greg
do-
Bromers? Here we are.
or do I like anyway? Like the things that are coming out of what is an interesting campaign is really quite. I don't know what it says about the culture right now, but talk about this whole
Yeah,
controversy about Sydney and her jeans. I thought it was a
yeah.
brilliant campaign,
Well,
but maybe I'm not. I don't know. I don't.
well, there are actually two, I think, really great ads just in the past
Yeah.
week, and the American Eagle Sweeney or Sydney Sweeney ad is, I think, terrific advertising. Now, I do understand. So if people don't, I mean, you have to go watch it. I'm not going to try to describe the ad; that will not do justice to it.
No.
But it's created a lot
No.
of
No. No. No.
controversy
Mm-hmm.
because it's basically a play on words between genes, genetic genes, and blue jeans. And some people have called into question whether it's a good idea to have this sort of advertising about kind of genetic some people read it as genetic superiority with a very particular sort of, blue-eyed blonde person. So kind of suggesting, sort of the Nazi kind of aspect. I am
None of
very
which even
certain.
occurred to me. Like, here's a question for you. You've been through these campaigns. I have, like at the construction side, the architecture side,
Yeah.
the behind the scenes. Do you have any advice to modern marketers? I mean, Craig is one of the savviest, best CMOs I've ever met, and certainly operating today. But when you see these things kind of go sideways in ways that I'm sure they did not anticipate, nor did their probably high-paid agencies. Do you have any advice about this to the people? Leadership
I-
advice or
I'm
whatever?
really,
I don't know.
I'm really mixed on that. Well, first of all, I'm sure that was not their intention at all, and I would be shocked if this didn't surprise them. Having said that, I do think it's a good idea when you're doing something on the provocative side. And I think, to me, what was the obvious provocative side of this was the sexualized imagery. Like, this is much more reminiscent, I think, of the old Victoria's Secret, the old Abercrombie and Fitch stuff. So my guess is that that was what they were focused on, but it's executed in a way. And Sydney Sweeney has become so incredibly popular that my guess is they weren't focused on other ways it could be interpreted. So I would say, on the one hand, you should be sensitive to that, and perhaps they should have anticipated this a little bit more. But who knows? Maybe they said, if that happens, not a bad thing, because the campaign is absolutely blown up. I mean, the amount of earned media they have gotten for this thing is incredible. So, like I say, I don't think this was by design, but in the war for attention, erring on the side of being provocative is not a bad thing generally. And I think you and I have talked about this separately. Like, I've had conversations with people. This is such a stupid analogy, but hopefully people will get my point. But I often will ask people that have come to have me speak, how provocative is the audience going to tolerate? Because part
Mm.
of what I'm trying to do, not just to do it, is make people a little bit uncomfortable, because if you don't get uncomfortable, you're not likely to change. So it is somewhat by design, but you have to understand your audience. I guess that's my point. And here you could argue maybe they weren't quite as sensitive to it, but also, you just cannot make everybody happy. I mean, people get sensitive about almost anything. What I come back to on this campaign in particular is, would it have worked with a super hot, super popular woman of color? Absolutely. Would it work with Pedro Pascal? Absolutely. I mean, they wouldn't shoot it in the same way, presumably, and that's a different that's a different podcast. But it's a very
This is the
clever,
way.
yeah, it's a
This
very
is
clever campaign that's really well done. But I do think, some of it is oversensitivity, and some of it is something probably they could have paid a little bit more attention to. The other ad I wanted to mention, I was watching our time. I mean, internet blew up, of course, with this astronomer
Oh
thing
my
with the
goodness.
CEO and all that kind of stuff. Well, if you haven't seen the astronomer Gwyneth Paltrow ad, again, I'm not going to try to explain it, but it is among the most brilliant, seizing the opportunity. If you don't know, Gwyneth Paltrow was married to Chris Martin, the lead singer of Coldplay. So, I mean, it's so just clever, and talk about turning a PR crisis into a PR opportunity. No notes, as my comment. Chef's
No
kiss.
notes. All right. Well, let's bring this home. Thank you, everyone, for listening, and be sure and continue to keep listening. We got lots more interviews coming up from Commerce Next in subsequent episodes. We're going to do another one of these to wrap the month of August as well. Let's talk about looking ahead. What are you thinking about for the next month? What's on the horizon? Obviously, we've talked about
Yeah.
tariffs. But
Well,
anything? Talk a bit more about that. But anything else that you're looking forward to in the future? Looking for?
Well, I don't have much more to say about tariffs that I haven't said, and perhaps said too much about already. I mean, clearly it's going to be very top of mind for everybody for months in different ways. The next few weeks clearly will be more about how much certainty do we get on what the rates actually are and what they cover, and all that kind of stuff.
Mm. I don't put those
And
two words. By the way, I don't put those two words as a Canadian in the same sentence anymore. Certainty and tariffs. Like we
right,
we take a perspective that it doesn't really matter what we agree to or what it is today, that it'll be something a week from today. Last while it was fentanyl. Now it's
Sure.
something else.
Yeah.
We already have a trade deal anyway in place that seems
Oh,
to be null
that's
and void. So, I mean, there's many people I've talked to on the political side, and it's like, this is like a slow moving opera. It's never going to be solved until something just
yeah.
pops up. So we're a little bit afraid of like, or getting used to on another way is
Right.
like, why bother agreeing to anything? Or conversely, agree to everything. You want us in the Golden Dome? Yeah, sure. We'll commit to that. Yeah, sure. Whatever.
No, I
Want a
think that's a
fentanyl czar? We'll agree to that. Yeah, fine. Whatever.
yeah, I think that's a very valid point. I other thing, I mean, if I had to predict, my guess is there will be lots of carve outs. And by the way, if you buy some Bitcoin, perhaps you'll get. I mean, like I think about, for example, we didn't talk about Starbucks, but they're in the midst of a turnaround that's not going so well, and
Mm.
then Brazil gets hit with a 50% tariff. Now, I don't know what percent of the coffee that Starbucks sells come from Brazil, but it's not nothing,
Not
and
nothing.
they're already struggling. So I think if I'm Brian Nickel, I'm getting on my corporate jet and going to DC and say, hey, like, you're killing me. So, and just, there's hundreds and thousands of important executives that are in the same situation. I mean, part of what the Ford CEO was talking about was like, I mean, he didn't say this, but pretty much like, so it's actually cheaper for the Koreans to make cars and pay a 15% tariff than for me to pay a 50% tariff on this and 25%. Like when you think about it, like regardless of what you think about, like, that makes no friggin' sense. So I think as the dust settles to the degree it can, there are going to be lots of things that just clearly need to be rectified, or then we're just completely in an upside down world. So that we've got, as I mentioned, we've got most retailers starting to report in just a couple of weeks. So things really kick off the week of the 18th. So just a couple of weeks from now, with Walmart, Target, Home Depot, Macy's, a bunch of others. What that commentary is there, I mean, not only what the results are, but what the commentary is about. Do we see this demand pull forward? What are their pricing plans? To the extent they've taken pricing action, which some of them have, what's the impact? So I think it's really,
We'll
really
start to
going
get
to
a sense
be
of
interesting. Yeah,
impact.
that'll be much more tangible, though I still think it's the next quarter where we'll really
Mm.
have a much clearer idea. So I think that's really what's on my radar screen. And who knows, maybe we'll see some other great ads. Maybe we'll see some other great headlines. I forgot to mention, I did love the headline about the American Eagle ad, which was, do these jeans make my ad look racist? I think that was a pretty good headline. So,
Very
I mean,
creative.
there's a
Very
creator
creative.
economy, really. Like, I just
It is.
thank you,
It is
thank
truly
you,
a
thanks to
creator
the
economy.
internet, thanks to the internet for getting these in front of me.
And thanks to all of you for sticking with us. This is, I wouldn't say this is a new format for us, but it's a summer, so we're trying to riff and just see what's going on and catch up. And it's great to be on the mic together, so that we're a little longer today. We're not, we're no Joe Rogan, but it's a little longer than we usually go. So for anybody who's left still listening,
That's
thanks for
right. That's right. Hope
thanks,
the
Mom.
pizza
Thanks for
tasted
hanging out.
good. Yeah. If
Yeah,
if you
Mom. Thanks
liked
for
it, tell all your friends. Give us that 5-star review. If you didn't like it, shut the f up.
Yeah, yeah. Just keep it to yourself. Anyway, so listen, we got lots more great bonus episodes, not bonus, summer bonus episodes, I guess we could call them, coming up in the month of August. And we're back on the mic for the launch of our new season. We got some fantastic people lined up to join us on the mic. So be sure and tune in. And for now, that's it. I'm Mike LeBlanc, and I wanted to wish you safe travels for those of you who are traveling. And you are?
Steve Dennis. Still, after all this time, still Steve Dennis. 2 first names.
Still after all this time, still Steve Dennis, who tells me not everybody travels, so I shouldn't say things like that. Anyway, talk to you all. Talk to you all later.